Hello, everyone. Don Garman here again from Mirador Capital Partners. Here we are, July 2025. Here we go. Second half of the year has begun. I'm going to keep it short and sweet today and actually primarily a message of gratitude. And then I will end with some of the things we're looking for in the second half of the year to give us clues as to where we might be headed next. Just to recap, last month's video, June, I referred to the fact that we had removed the defense from the field, that there was enough signals that were uh, uh, observable that gave us confidence that we would no longer need to be treading as cautiously as we had been prior to that. I'm certainly grateful that we did that. We obviously, as has been widely commented on in the media, it was a great June, and it was in fact a great second quarter, and all strategies ended at new highs. So we're grateful for all of those things, and of course we have to ask ourselves what's next, and I will get to that here in a moment. Before I do, I want to be sincere in my thank you to all of you. Mirador, which turns 12 years old on the 5th of July in 4 days, obviously the day after July 4th, Independence Day, had our best first half as a business by far in our history. So we have no choice but to thank you. And it's because of the referrals that you have all sent to us, introducing us to your friends and family, that we have to thank for the good first half of the year. As you know, we try to be consistent and thorough and rigorous in how we apply the craft of what we do. And I think, if I may, in our 12th year, have been people clearly that have been observing this from afar for some bit of time and have now decided that they would like to join us, and we're grateful for that. So we'll continue to do the very best we can to wow you with the service and also deliver the type of investment results that I know you have come to enjoy and expect. So onward to the second half of the year. So in terms of clues, the big question is that will have to be settled in the next couple of quarters has to do with the tension between the AI capex buildout versus the expected revenue that will help generate an ROI, a return on investment from all of that spend. So if you're following along, the largest technology companies in the world are locked in this arms race battle to build out and control their own destiny in the next phase of technological evolution, which will involve how we're all going to be using these AI tools. Implications everywhere you look in terms of how this actually goes. If we can all just talk to our phone and book a flight and book a hotel and book a reservation and all of these things that, used to be jobs, travel agents, personal concierges, all these different roles that people played, if those are all gone, and then ultimately cars are driving themselves, those are jobs that people have taken in the gig economy, which were good supplements to other jobs. And some people make full-time careers out of those jobs. Those could potentially be gone. It leaves a lot of questions, and not all of these questions are even answerable at this point. The history of progress is that it won't be widespread joblessness and despair. The reality is that these technology phase shifts have produced larger pie, more prosperity, more comfort for more people. And I don't know what the utopian version would be, that we maybe have on the margin some more leisure time, but we have meaning in our lives through our work, and more productive, solving bigger problems, curing disease, things to work on, which are higher function things than we did in the past. I mean, it's naive to say that it couldn't go that way. But what will have to happen between now and then is figuring out the revenue model and the business models around these businesses. That relates directly to the earnings per share that I referred to in our last video, and around this $300 in S&P 500 earnings for next year. So market's probably already looking at 2026 earnings to get us to the valuations that we are trading at presently. To get much past that, earnings would need to start growing from that 300 number. History suggests that they will contract further before we get to that point. That's what's happened. I think I almost said the same thing this time last year. So my concluding point is, while it's been a nice recovery from the April Liberation Day slaughter, massacre, whatever you want to say, that really acutely painful period that we endured in April, and then the tenuous recovery in May into a more, return to more of an optimistic mood in June, that phase is likely over. So we've gotten, we're sort of back within a couple percent of where we were in the last high. To go much further from here is going to require net new news. So what I would prepare yourself for mentally is some period of digestion of the last move, some chop, some up one, down one type activity and action in the markets. My point would be, it's probably not just going to be another June into July, although historically July has been a pretty good month. We'll know more a week from this Friday when earnings start for the Q2 period, which is obviously reported July of this month, start the beginning of Q3. So thank you. The 1031 exchange stuff that we're doing for people has really hit home. We have a lot of those in process. You've gotten the message about the financial planning that we're doing. Stock options planning for people has been really well received. More people than we knew of had those issues, and we're happy to help with those and very good at it. And very much gratitude for the referrals that you've sent in. Whatever we're doing has resonated with some of you, and I certainly couldn't be more grateful as we round our 12th year anniversary and start our 13th year. I do feel like our best days are ahead. The best is yet to come. Not to steal a stolen line from Kimberly Guilfoyle, but there you go. Anyway, have a happy 4th. I hope you're spending it with loved ones, and that you guys are all healthy, and you're having some fun for the next few days. Certainly, we will have our trials and tribulations in the second half for sure, but we've endured a lot. So I'll keep it short and almost give everyone a month off of any charts or anything of the sort. So thanks again. We'll talk to you soon.